What's up, guys? Welcome back for another episode here on Let It Grow Investing. I'm Jeff. Thank you very much for stopping by. We've got a ton of different things to get caught up on here. I have been going over a couple things that we need to really pay attention to in the market. So I'd really appreciate a like, subscribe, and share. Definitely means the world and helps out the podcast and helps build a community. We got a community built over there on Facebook.com/Let It Grow Investing. There is a link in the description. You can jump over there and see what's going on. If you need to post something, please, if it's a recommendation on a stock or anything to do with a different group, please clear any group recommendations with me first. And if it's a stock, at least give a little bit of context as to why you're recommending it. Don't just say, moon coin to the moon or whatever. Please give a little bit more definition as to why you're recommending anything, right? Or at least what people should be looking for when they're looking at that stock or that coin or whatever it might be. So with that being said, we can dive right back in. We've got a couple different things going on this week, right? We had the Fed come out and say that they are keeping rates unchanged. We are looking at kind of the context around what Jay Powell was saying when it comes to the rates and what the economy is looking like. So I'm going to go ahead and share this. I had some problems here earlier, so I'm actually going to keep a closer eye on what's going on the recording. But yeah, we've got this is over here on Forbes. A Fed holds rate steady, what it means for stocks, right? So we're looking at that same target rate of 4.25% to 4.5%. Indicators look like the economy activity has continued to expand at a solid pace. They did go on to say that GDP for 2025, they revised lower down to 1.79%, I believe, from 1.9, and inflation they actually raised up for that 2025 guide. Unemployment rate has stabilized at a low level in recent months. Labor market conditions remain solid. Inflation remains somewhat elevated. They did mention that tariffs are a reason that we're looking at inflation being elevated. A little bit more risk on the recession front, but they are not in any sort of imminent danger of pushing into a recession. Rates stay a little bit elevated for a little bit while longer. We're looking at potentially 2 rate cuts for calendar year 2025. And I don't think they're going to be huge. They also don't want to cut rates too much, and then we have inflation run away. If we cut rates too much, more people are buying. Cost of capital is cheaper. More people are, purchasing more things, and then the cost of those things goes up. So we're trying to keep demand in line with supply, really. We're just trying to keep that tight balance on what's going on there. So this is GDP. Oh, it was not 1.9. It was from 2.1. And they raised their inflation projection to 2.7 from 2.5. I might have had those numbers wrong. So yeah, we had that on Wednesday. And the market rallied off of some of this news as well. So a bunch of different things going on there. We've got, little story that stocks can thrive no matter the interest rate direction. So yeah, different stocks are going to be, winning in different markets, but we definitely have things that do well in this same sort of range, right? I'm thinking like a lot of the bank stocks should do really well. We still have pent-up demand. Unemployment's low. We still have a little bit of wage growth. Yes, things are a little bit more expensive, but people aren't really seeing major cuts in rates coming soon. So I think more people might say, hey, if I'm going to buy a house or have a big expenditure, maybe I can go ahead and do so now. It's not getting much cheaper over the course of the year. We're not really seeing any real reason that the housing market should just collapse. So yeah, maybe we go ahead and start purchasing those things, or maybe we do a cash out refi, or, a line of credit for a business or for a personal need, right? So more businesses and individuals going to be building with these elevated rates should do better for bank stocks. Pharmaceuticals, I've been pointing at those for a while. We're seeing some sell-off in some other stocks that are tied to retail, but also consumer staples. So we're watching that as well. So a lot of different things that are going on out there. Volatility is the norm, not a reason to sell. We had a lot of volatility. And like I said, it wasn't necessarily a cause for me to sell on my Tesla stock. It wasn't the volatility. It was a lot of the uncertainty around Elon Musk being involved in the amount of backlash and pushback that he's getting on the Doge project, and then all the vandalism and the problems with people attacking other Tesla businesses or Tesla vehicles. So we're really watching that as well. That was one of the reasons. And Tesla's been volatile since I've ever paid attention to it. But yeah, then now it almost seems like a different problem. It's not just we're anti EVs. It's now we're anti EVs and we're anti Elon Musk, right? So there's a lot of different things going on at the same time. So that is something that I am watching a lot closer, and I greatly reduced my position in Tesla due to this. So not the volatility, but the backdrop as to, having Elon in a position of power and a lot of, pushback from, a political standpoint. So that's what I'm watching there. We also had Jensen Huang of NVIDIA. I'm going to actually pull up this one now. Having that GTC conference. What was that? GTC conference in California kicked off with a keynote from Jensen Huang. AI is making extraordinary progress. He's unveiling new chips. He's got the Blackwell Ultra coming out in the second half of 25. We're upgrading some of the things or revising it so they're not overheating. The new Blackwell GPUs, it does say overheating and glitches. We did have that problem. They did rake in around $11 billion in revenue after facing delays and these different problems that I just spoke about. I think with NVIDIA, a lot of the things that Jensen Huang was pointing to in that keynote was the fact of robotics and how big of an industry that can be by 2030. So they have a pipeline of new chips that are going to be coming out through 2027 or 28 that they have announced. And then he really stressed how big this opportunity could be in robotics, right? So he even equated it as being bigger than the energy production industry itself, right? So you think back to the Rockefellers or the whole oil boom, and he's saying that robotics will be a bigger industry than that currently is or ever was. So that is a pretty big feat to have robotics take over that much, and we'll see just where that lands. Is it going to actually happen or not, or is that just his bias towards AI and the chip space and robotics and full self-drive and everything else that goes along with it? So definitely interesting to see where that happens and how that unfolds. I think right now, I was looking at some NVIDIA charts. There's a couple things pointing to a sell-off. We had a cross in the 50-day and 200-day, the simple moving averages. So I'm watching that. There is a little bit of bearishness there. But I think if we are long-term investors, I certainly am when it comes to NVIDIA. I think that this is a decent time for me to go ahead and add some more shares. We're sitting at 117 now. We got down to like 107, but I think that this is going to be continue to grow. In a conference call or in an interview that he had with Jensen Huang and Jim Cramer, he was saying that, Cramer was kind of pointing to the fact that NVIDIA could be the first $10 trillion company. And with the amount of growth that he sees, I don't think there was any pushback on the fact that it could be the first $10 trillion company. So the demand is there. The chip space is growing. We've got a new product coming out. We've got, here we are, the AI super chip Vera Rubin, the second half of 26, and the next gen super chip after that, the Vera Rubin Ultra in the second half of 27. A lot of different things he's pointing out there. It had sold off after this announcement on Tuesday, right? Yeah, failed on Tuesday, and they've declined about 14% year to date. And that's definitely what happens after a lot of these big run-ups is, we get a little bit of sell-off. We find another level of support. We get back to a comfortable place, and then we rally off of that. I did want to pull up the NVIDIA chart here, and I was taking a look at this one earlier, and I'm trying to see just what we can do here. Let me go ahead and pull this up. We've got 117. Let me go right to the charts. I had it all set up with different markers here. Yeah, we're at 117. We had this cross between the red is the 50 day move, simple moving average, and the purple is a 200 day. So the 50 is crossing below the 200, and I find that to be a bearish sign, generally referred to as a death cross, when your 50 day tanks through that 200 day, that longer moving average. So that is not a great sign. We have had people kind of coming back in and running this back up. It is in the middle of this RSI, showing that we aren't really overbought or oversold, but it has been this gradual decline. So I'm still thinking long term, if you've got a long enough time horizon where you're looking out till 2030 or beyond, I believe that it could be a good time to buy NVIDIA. And kind of as Kramer says, own it, don't trade it. And I kind of do a little bit of that, but I did have some covered calls that just expired on Friday at 158. I think I told you guys if it got to 158, I would be comfortable selling it from the standpoint of I didn't think it really had too much more room to run at this given point in time past 158. So, but covered calls and options are a lot about timing, right? Simply put, if you look at Tesla, if we bought some of those, you had to time it just right for that $479 high that they hit. And now we're back down to 240 something. So definitely a big swing there. And if you didn't get it, now you're on that negative side where, hey, if it would have hit 500, I would have sold 100 shares for $500 a pop. You got to time it just right. And it might have just missed your target. But I didn't have any of those calls written. But nonetheless, I'm just saying, as far as a time thing, you got to sometimes play this volatility just perfect to get a covered call right if you are trying to sell it for the maximum amount of money that you possibly can, unless you're okay with just selling it at that predetermined price and knowing, hey, I was moving on anyhow. I got a little bit of premium. I sold it for the price that I wanted, and I'm good. So, yeah, we're looking at that. Next up was going to be Micron. Let's check over here and see what is going on with Micron. Well, they had their earnings, right? Despite gross margin. So what does that mean? Well, essentially, they beat. They slid on Friday following their second quarter results. Many analysts are still bullish. Improving outlook for their DRAM chips. So that is a big deal. We've got more and more people using their chips. They've got, all the big computer companies use their chips. Even NVIDIA uses Micron chips. So we have more and more demand for the chips. But the issue was that their gross margin projections came in lighter than what was anticipated. So we did have earnings here showed that we had more sustained supply demand dynamics as long as AI continues to grow. We had a double beat. I was trying to get to that. I know that was here. We had, and they actually went up after earnings, right? This was on Thursday evening. We were sitting around 100 end of the day on Thursday. And then I believe we got up to like 105, 106 after hours. And then we tanked down to like $94 on Friday. So yeah, the chip makers' revenue and profit forecast came in above. We have more demand for DRAM chips, but the gross margins was this fly in the ointment. So if I look at all the different price targets when it comes to Micron, a lot of them are still really, really strong. And I think it's a company that hopefully does not get too drastically affected by tariffs. Jim Cramer then went out and pointed to the fact that, hey, Trump, please don't go after Micron. It's the crown jewel of semiconductor chips in America. Don't mess with it. We really want to see this thing succeed, right? We really want to have them do well for all things, right? For all the growth, for national security, for everything else that we need their chips for. So yeah, we're looking at this stock that is at 94.72. The 200-day is still sitting above the 50-day. So hopefully we can start to see this 50-day rise back above the 200-day. And if we do see that, that would be a golden cross. That is generally referred to as a bullish signal to where that trend should continue. The 50-day, the shorter duration moving average starts to cross that 200-day, that longer term, and it means good things are going to happen for that stock as a whole, right? And we pressed up against it here and here and here, and then we retraced. So we haven't gotten quite broken out above that 200-day, but it almost looks like some of these highs and lows are kind of not being as far spread apart as they were, right? It kind of looks like we're a little bit more choppy here versus some of the big swings when we go back like 9 months ago. So I'm seeing like it almost looks like it's just kind of trying to break through this, and it hasn't quite done it yet. But if DRAM and AI continues, I really think that we're going to see this 50-day start to trend higher than this 200-day sooner than later. We did have this cross here, right? That's a death cross. That's when that 50-day crosses that 200-day, and then we're down here, right? And we're trying to break above this 200-day level of resistance, and it retraces it. I mean, how many times? We will try 1, 2, 3, 4, 5, 6, 7, 8, 9 times to beat this 200-day. And we had a little bit at the beginning, but then we just kind of gave it back, right? So now we're just compartmentalizing all these dollars, and it looks like hopefully we can start to push higher here. Some of these lows, it looks like the lows from, this is December 31st. They look like they're higher multiple times, and we don't retest this low and break that 84 level of support. So hopefully, as this kind of squeezes tight, hopefully we can start to break out to the positive side with some of that positive earnings, positive guidance on DRAM. Yes, we have weaker margins, and that brought it back down, but it did want to push above this 200-day after earnings initially, which I think is a bullish sign as well. So a lot of different things there to take in. I still think that Micron's a great company. I do own this one. I will probably be looking to buy more. Gosh, sorry guys, I forgot to share this one. So this is the 9 month, right? We're looking at a 9 month, and let me go ahead and change back up. Let's go 9 month. If you were listening audio only, you didn't see what I did, but I wasn't showing you guys the chart. So you will see this 50-day cross, this 200 here, death cross right there. And then we tried to beat this 200-day all these times, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Breakdown after earnings, and I'm thinking hopefully we can go up. So quick recap if you were trying to pay attention to it and I didn't have it on the right screen. So that's my kind of 2-cent observation as to what I'm seeing, what I want to see happen, and why I think Micron can go higher from here. Demand, AI, DRAM chips, and a lot of the different major super adapters of AI and everything else, or adopters of AI, are looking to build out more with the chip space right now. So I still think that Micron is, I think, setting up for a decent run higher here. And when we're looking at this analyst research, we're still seeing some high price targets coming in, even from Friday. We got around 38% of upside on the average. Just this week, we had price targets at 120, 130, 200 from Rosenblatt, 125 from TD Cowen, 120 from Needham. And look, I mean, even at 120, we're 25% higher from here. So I'm very comfortable buying that, thinking that even if we get to just 120, when the average is floating at 131, we're still really comfortably moving up from here. And I think long term, as long as AI and the NVIDIAs of the world continue to build, I think Micron's going to be there to support it. So I'm bullish. And I mean, I just stressed all the reasons why I'm bullish here on Micron and the chip space as a whole, right? I think a lot of them have sold off too much from the start of the year. I was looking at the 12 stocks that I was really hoping that were going to be the winners of the year. NVIDIA, I mean, Tesla has gotten sold off. Meta, Amazon, those 4 have definitely traded down. Meta might be an exception to that. Let's take a look here, just because I'm talking before I'm really taking a look. But yeah, we're at 596. Where do we start? Yeah, we started the year somewhere around, where was this? This was at 212. We were at, it's hard to tell on this price chart. Let's see. Let's go back and let's get an actual answer. We were 57 on February 14th, and now we're sitting at 596. So a decent pullback there as well. I still think that Meta can be a $700 stock by the end of the year. I know analysts are saying that this is going to be like 760. I don't know that we get that high. But again, it just depends on the timing, right? I think it could get there, but I also think if it does, it's probably going to pull back to a reasonable level somewhere in the middle. And I mean, similar to Tesla, right? Tesla, if Elon does something, steps out of the way, does something, right? I think that Tesla will be, a $400 stock tomorrow if that happens. But it's a lot of ifs, right? And if the whole Doge thing does go well and he starts handing out checks to the general public for $5,000, if they save that $2 trillion that they are continuing to say that they save, do people start to favor Tesla again? It's hard to know, and it's hard to know when these checks might actually get issued. Do people kind of start falling back in love with the idea that maybe he's not, this dictator that people think that he is? I think he's a genius that has been poked a couple too many times, and now he's going after the people that have kind of poked him the wrong way. So I don't really know where that ends up. I think with Meta, I think we end up somewhere around 700, and I'm comfortable with that as well. So yeah, but a lot of these other companies have drastically sold off, and one of the ones that well, I won't get to it quite yet. We'll save that for a second. So I covered NVIDIA, we covered the Fed, we covered Micron. What did I have earlier that I'm forgetting to cover now? I did want to cover Eli Lilly. That one, we were looking at it last week being like 795, 800. Now we shot up to 837. We still got around 23% of upside here. Very, no real downside from this point, right? We got about 7.5% of upside, even with the low price target. And this thing has pulled back significantly as well. When we're looking at this one, this was a 1,000? Did it hit 1,000? Maybe not. Maybe I'm giving you guys wrong information. Where was the high on the year for Eli Lilly? Where were we? We were at 972. So we crept on up there last August. We came back down in November, 711. I was buying this one at like 730, probably year to date. This was probably around here, around middle of January. I was buying this one. Ran all the way up to 930 and then came back on down. So I would probably be looking to buy more Eli Lilly with like a low eights, high sevens is probably where I would be looking to add more Eli Lilly to the equation. But I definitely think that pharmaceutical stocks have a lot of momentum. We aren't so tied to tariffs on those, at least at the moment that I'm aware of. We have enough demand here. Eli Lilly has a very strong pipeline. Bristol Myers, I hear a lot of people talking about that one as well, having a strong pipeline. Solid dividend, 4% dividend. I don't know what kind of upside we have here. Again, I'm kind of speaking with not much. We have a lot more on the downside with Bristol Myers. So maybe we already ran up significantly, and we have from the beginning of the year. No, that was July. Sorry, I'm looking at this with the pop-up in the way. So I'm thinking this one might have already run. I don't know that this is one that I want to buy. I'm still on path with Eli Lilly. Still hold AbbVie. I sold it out of Johnson & Johnson a long time ago. So I think Eli Lilly and AbbVie are my two big players there. AbbVie still gets us a decent dividend, although now that it's run up to 210, we're only getting around 3%. But this one's done well for me. But price earnings a little concerning. We got to take a look at that. So I'm still probably team Eli Lilly, even though this price earnings is high as well, but it tends to be with the way their business is set up right now. So that is what we got for pharmaceuticals. I talked a little bit about banking. Bank of America was on the list of stocks that I could potentially buy right now. A 2.5% dividend yield. We've got a decent amount of upside here. I think it was like 25%. 24 and a third, right? So average price target being 52.81. I think that with rates staying elevated for longer, more people start spending with that rate, like I was saying earlier. We're a little bit more comfortable with that 4% handle. We know where mortgage rates are. We don't really expect them to come down. We know where borrowing money is. Still, the growth stocks are going to be in a tighter, under a lot more pressure right now. So I don't know that I'm really going after any stocks that aren't making money right now, unless there's something on the horizon that is going to change that. So I can't even come up with anything off the top of my mind that fits that criteria. I'm sure there's some, but I think some of these bank stocks make sense. But the one that we are going, or I'm going to be buying for the investing challenge, if you have not yet joined, feel free to do so. You can follow my link on the show notes for Webull, and you can follow right along. And that would definitely help out the podcast as well. So that's one of the only things that I offer as well to help support the podcast is the fact that you can start a Webull portfolio using my link. You get some free shares. I get some free fractional shares as well. So it's kind of a spin of a wheel. You open an account, put in as little as $10 or whatever it is, and you get free shares. It's really simple, and I've been using it for 4 or 5 years now, and I'm pretty happy with the service as well. So, and the fractional share investing is great for buying Costco. That's $909. If you don't want to spend a $909, you can go on Webull, buy as little as like $10 of a stock. So that is helpful. Now, when it comes to Costco, we never see Costco with a 20% upside. I mean, I don't know how many times over the past 4 or 5 years I've said Costco is priced to perfection. It's been a lot of times. It's been quite a few times, right? So the fact that we're seeing Costco pulling back from these, I don't know, like close to $1,100 highs. Let's just take a look. Let's get this one right. This high was at 1,078 on February 13th. So yeah, we've pulled back, 170 points from the highs. We've got a substantial amount of upside. Now, some of these price targets are probably older, but we do have some from one from this past week that was at 1,035. We've got a hold rating from 313 at 1,000, Evercore at 1,070, Barclays at 980, BMO at 1175. This is within this month at this point. So why did this thing sell off? Why can we buy it now? Well, I have a feeling that this got sold off from the standpoint that everyone thought that the consumer was in, a scared state. Like I said, people on last week's episode, people didn't really want to travel as much, right? We were looking at United and Delta saying that there isn't as much demand for travel. So they kind of cut things back. And they probably oversold those companies as well. So I'm thinking that Costco kind of goes into some of those categories, right? Some of it, what they do is consumer staples in the way of food and paper products and things that we use every day. And then you have a lot of stuff like the TVs, the jewelry, the gold bars, which they're still selling out of every day. But a lot of the stuff that is in there is more cyclical, right? We don't necessarily have to have it. We can hold off on buying a new TV a lot of times. Yeah, maybe we want a new TV or a new laptop, but we just kind of wait until time is right or our money's right or we're not fearful about our job. We don't have mass layoffs or government problems with shutting down whole divisions. So I think a lot of that is affecting the consumer, right? At least in the short term, right? So the Powell coming out and saying that we have this strong labor market, right, is potentially going to flip that script. We've got him saying here that we've got, where was it? Maximum, they seek to achieve maximum employment. That wasn't what I was looking at. The unemployment rate has stabilized at a low level in recent months. And that stabilized is a key word there. It's not just at a low level. It's now stable there. So if we can keep that unemployment at a low rate, I think Costco has more room for upside. I think we've oversold this thing. And I believe that we can start to see Costco really start to rally back higher. So the 50-day for Costco is still above this 200-day, which is a bullish sign. If this 50-day drops below it, I think we're on the path to more lows. But, I guess if we can maybe zoom out, did it reach this 200-day before? Over the past year, it has not. Over the past 3 years, it has several times, right? So it was all this beginning of this 3 years, and then we started to break higher, right? So this is the first time, and potentially this was June 1st of 2023, that this 50-day has this price of the actual stock has dropped below this the 200-day moving average. So it doesn't happen too frequently, and we can see how tight this range is on a company like Costco. And that's a lot of the reason that I said this thing is always priced to perfection. We were just right on that line. The 50-day and the 200 are right next to one another, and they just really didn't budge. There wasn't a lot of movement. Now we've got a lot more of these pops and kind of spread out pattern here. This pullback, I really do feel is a lot of consumer fear. I think Powell eased a little bit of that. I think the job market is going to ease a little bit more, but I do believe that this is an over exaggeration to fears with politics. That is my 2 cents, but we also have tariffs to worry about as well. So anything that they import from China is going to have these higher costs associated with it. And I think that could also be another driver for this stock price to come back down. Now, do I think that the tariffs are going to be forever? Man, that's a tough question. I definitely believe that it is a bargaining chip right now. I don't know how much staying power it has or how long this tariff thing is going to last until we get enough people to come to the table to really, wind this back and kind of undo some of the tariff talk. But in the short term, I'm not seeing any real reason that the consumer isn't going to go back to Costco and buy the goods and things that they always buy there. Maybe we dial back in a couple areas. Maybe we're not buying the TVs that have those higher tariffs, attached to them. But I think a lot of the food and everyday items are still going to be purchased at Costco. I don't think people are canceling their memberships to simply save $1 or $2 here or there. So I think that Costco could be purchased right here, right now. So this is where my $200 is going this week for the Let It Grow Investing Challenge, which is in year 4. So I will be buying $200 on Monday. Hopefully we can get it around this price and it doesn't, skyrocket first thing Monday morning, but I will be buying around lunchtime. That is what I always do. For 4 years now, I am aiming for roughly around a 12 o'clock midday purchase, right? So that is what I'm doing. I'm going to continue doing that. If you want to do that as well, I have that link in the description for the for Costco, for Webull. It'd be kind of funny if you could buy stocks from Costco. It wouldn't surprise me. But I will be buying Costco on Webull, $200 worth on Monday. That's why I think there's a lot of different stocks that really do make sense. But right now, I think Costco's oversold and we don't get an entry point like this with upside on Costco very frequently. So I want to go ahead and purchase it while people are kind of kicking it out. It's not quite in fashion right now. There's a lot of other stocks that fit this need, right? Or fit this bill. I think that AMD is one of the same type of situations. Yes, their chart is a little bit worse because they are, got this cross on the 50-day more recent. Well, this is not recent. This was earlier. Now we are crossed and the 50 is below it and the stock is below that. So I think this is going to have more divergence between the 50 and the 200-day until we can get a little bit more footing, but I would potentially look to buy more of this as well, right? So we've got analyst research on AMD, 38% of upside. We covered NVIDIA with the 50% upside. I forget if it was this recording or if I already said it earlier, and now we're looking at another one. Yeah, the 50% upside on NVIDIA. I don't know how much more you could ever ask out of that company. Tesla, tons of upside, but a lot of risk there as well. Amazon, what are we looking at for Amazon? I'm just running through the 12 stocks I was looking at buying this year. 37% upside on Amazon. I can't argue that one either. Eli Lilly, we covered that. Next Era should just be booming on up here. I'm comfortable with this one as well. 21% higher on a utility. Sure, I'll take that. CrowdStrike, and this one has been all over the place, but let's take a look here. They got any upside left to give? Or we 16%, nothing crazy there. Bank of America, we covered. AMD, we covered. Bitcoin, we were at like 85,000. I still think buying Bitcoin long-term is probably a great pick as well. But yeah, I mean, if I had to pick right now, today, Costco, I would certainly be adding more NVIDIA, more Amazon, more Bank of America, definitely Eli Lilly at the right price. And that's what I got for you guys this week. So thank you very much for stopping by. Please make sure you like, subscribe, and share. It really does help the podcast grow, and I would just appreciate it. And yeah, that's about all I got for you guys for now. Get out there, get invested, and let's let it grow together. I'll catch you guys in the next one. Take care.